Okay, welcome to our weekly analysis for February 11th to February 17th. Today's Monday right now at 3:22 p.m. Eastern Standard Time. So about, an hour and a half into the New York close. Nothing much had happened for today, which is the usual Monday. Now, obviously, last week was really where the volatility is. If you have followed through my daily analysis video, we really had a pretty much the most volatile week in 2018. So, well, first of all, let's take a look at equity market first. Okay, so then you see what happened. So obviously, this was what happened last week. This is a daily chart. So we had a really, went from the highest point. This is Dow Jones. And you see all this red big candle. And now we seem to find a little bit support at, 24,000 area, between 24,000 to 25,000 in Dow Jones. And I think the biggest question in every trader's or investor's mind is that, is this a retracement, right? Is this just a healthy correction and then we are heading into the continuation to the uptrend, or this is the beginning of the reversal? Now, obviously, if you're a technical trader, you couldn't tell, because this could, find a support and then we break above the previous high, then that means this is really just a retracement. Or if we fail to break the previous high and then actually break down the previous low in all major indices, that means this is not just a retracement. Or that means that still could be a retracement, but a much, much deeper retracement. Now, fundamental side that we have equal amount of voices, then some people argue that this is in fact a reversal. Some people just say this is a healthy correction. Now, for me, I don't really know. So I can only trade what's happening in front of me. And for me, it doesn't matter how this is going to lead us. But one thing for sure, as I mentioned last week, is that, once the market has this kind of behavior, you need some time for the market to reestablish its ground, to find its footing again. So even if this is just a retracement, and we are indeed heading to another high or new high in the next couple of months, I still think it's gonna take a few days because market, you have to think right now it's very, very fragile. So because of that, I mentioned last week that I'm still quite interested to buy the safe haven currency, that including Japanese yen, Swiss franc, and US dollar. Now, a lot of people forget that US dollar is actually one of the safe haven currency. Now, if you're only looking at things from the US perspective, you'll feel like, why would people want to buy US dollar? Since if you look at DAX, has been a continuation of downtrend. But understand that I only show you the major indices of US. But if you look at emerging market or the global market, it is exactly same pictures because US financial market does lead the global market. So when the emerging market or the European market, when they have this kind of similar pattern, guess what? They still think US is the safest place to put their money. So although dollar had a very bearish year in 2017, but I think if 2018, the market continued to behave, starting from last week, continue to behave this kind of a pattern, it's actually going to be quite helpful for US dollar because you're going to have a lot of people putting money into the US dollar. And when chaotic things or chaotic moment happens, people still want US dollar. US dollar is still as good as gold, just like what we had in previous generations, in those war times. US dollar is as good as gold. So that's what I think. And I don't know how this is going to pan out. Maybe in the market. Look at today. We already have the gap up. So today is pretty good. But again, this is just Monday. It's really hard to tell what's going to happen. Okay. So, take a look at economic calendar first. Monday, as I mentioned, not much happened for the day. We did have few MPC members speaks, and this is really just a comment for tomorrow because tomorrow we will have the inflation data from UK. And this, as many of you know, we are really hovering around 2.9 to 3.1. So obviously, if the expectation is 2.9%, if we have something like 2.9 or 3 or even 3.1, it's not really a big surprise, to be honest, because we had a 3.1% last year in December. But obviously, if we don't have anything above 3.1, I will consider this as a dovish, as a bearish event for British pound, just because right now Bank of England has a lot of leeway to not hike in the interest rate, and certainly they do not want to hike interest rate unless they have to. Now the reason is because the Brexit is still up in the air, and the domestic data, although not as bad as people's expectation right after Brexit, it's still not as strong to argue for a case that they need to raise interest rate this fast. So, of course, if they don't need to, if the inflation does not shoot higher, then that's a good thing for the Bank of England, but that's also a weak point for British pound. Speaking of British pound, many of you know last week we had another bottleneck between EU and UK. Right now, negotiation continue about the transitional period. And right now it's still, again, up in the air, and that create a lot of negative sentiment for British pound last week. As many of you see, the interesting, really like a roller coaster ride, because first of all, you have a Bank of England meeting. This is a 15-minute chart, very, very shortened. First, you have a Bank of England meeting, which is very, very strong for British pound, and then pound gained tremendous strength, so that's why euro pound dropped. Then you have this kind of political sentiment completely pressure the British pound, so that now you see euro pound goes up again. So it's really just really a roller coaster ride. I did put an order last week, but did not get filled because we did not have a deep retracement. I have canceled the order for all the pound trade just because I want to see what happened tomorrow for the CPI data. Okay. And that would be the biggest event tomorrow. Then in Asian session, we have the inflation expectation from New Zealand. Now this could be interesting just because the last inflation data from New Zealand was pretty negative, right? It was lower than expected number. This is a quarter-on-quarter expectation number, but obviously any good reading will boost the New Zealand dollar, which had been sold off quite heavily for the past few days. If I zoom out, if I keep zooming out, remember this is New Zealand versus Swiss franc. Swiss franc is really the lowest yield currency. So really, domestically comparison, New Zealand should be a much, much stronger currency, but that was not the case heading into December. So basically, New Zealand dollar had a very weak run right now. So we'll see what happens if we have any strong domestic data to lift the strength of New Zealand. We also have a GDP from Japan, preliminary GDP. This is not it is important, but it's not going to play too much effect into the currency market, because for Japanese yen and Swiss franc right now, it's all about the sentiment. It's all about the risk sentiment. So that's really going to be the dominant driver for Japanese yen and Swiss franc. For Wednesday, we have another inflation reading out of US. This will again be important because remember the whole reason for the Black Monday last week, the whole reason for the equity market to drop. Now, you can argue, say it should drop inevitably because it had been a big bubble. Let's not go in that deeper. Let's just say what is the ignition to cause this kind of behavior to happen. It was from the non-farm payroll 2 weeks ago. In that non-farm payroll reading, we saw wages growth, especially year on year, went from 2.6% to 2.9%. And that caused a lot of inflationary pressure for the market. So people start fearing that Federal Reserve might hike interest rate further, which means that, cost of borrowing become more expensive. And that's why a lot of people start dumping US dollar. We also saw a bond yield shoots up last week. So that was the biggest reason. So obviously now you have another inflation reading, which will fill up again, this same scenario. So the expectation was 0.3 higher than 0.1. And obviously this is not the highest number. So I think unless, again, you have something that beats the previous high 0.6 for headline inflation, for core inflation, core CPI, if you have anything about 0.3, obviously that's going to be very bad for the equity market again, but it's going to give US dollar another push. Also gonna give US bond another drop. But for bond yield, it's probably going to push up again. So this will be important not only for the currency market, but for the global market. And that's why traders will they'll pay even more attention to this reading. Remember, the reason for the equity market to drop last week was all because the expectation for the US inflation. So this obviously will be important. And, I don't know what's the result going to be. But it's going to, if you have something outside deviation, it's going to give the market a very strong sentiment. If you have something that's lower reading, then the market will have a relief. They don't think the inflation is going to shoot up that fast, and obviously that's going to be good, very, very good for the equity market. But that's going to be bad for the US dollars. And on the other hand, on the contrary, if you have a very high reading, that's going to be very good for US dollar, very bad for the equity market. Then you have the labor market data from Australian dollar. Now this will be important, obviously, but not as important as the inflation data. So this, I wouldn't really trade it myself. Because for Aussie and New Zealand, really right now, the headline will be the inflation, but moreover, it will be the sentiment. So, as I just mentioned, if you want to trade Japanese yen and Swiss franc, you want to focus on the sentiment right now, because the safe haven currency will go accordingly with the risk sentiment. Same thing with Aussie and New Zealand, because if you go down, this is really the top two is New Zealand, Aussie, and the lower two is Swiss franc and Japanese yen. So this four currency really goes completely opposite direction. So right now, if the sentiment is positive, it's a risk on sentiment, then obviously that's going to be very beneficial for Aussie and New Zealand, regardless of the domestic data. On the other hand, if the risk sentiment continue to be off, if we have another panic sale into the equity market, into the global market, that's going to be very bad for Aussie and New Zealand, regardless of domestic data. So that's why I said this kind of data is not going to create a micro effect. It's going to be good for a short-term day trade, but it's not necessarily going to give you a prominent direction. Thursday, another inflation data, producer price index for US, but we will again focus on Wednesday first to see what happened to the CPI. And then you have the RBA Governor Lloyd speaks, business manufacturing data from New Zealand. This is all not a tier 1 data. Well, government speaks is a tier 1 data, but again, in this kind of scenario, not necessarily important. Then you are heading into Friday, retail sale and building permit. So that's pretty much it. So I said this week, the biggest headline will be tomorrow and Wednesday. First, you have the inflation data from UK and the inflation data from US. Let me take just a quick look of last week. So last week, we already knew what happened, but I just want to take a look at a data point, because I think, see, last week New Zealand had a pretty good labor market data, but that did not save New Zealand dollar. You see, this is hourly chart, still a pretty steady downtrend for New Zealand dollar, regardless of the domestic data. And all this is because the sentiment is a much bigger focus right now. And, another notable thing, so the labor market data from Canada last week was, again, like I said, very terrible. But if you look into the detail, this kind of big drop was all from the part-time jobs. So not necessarily that negative, if you're looking at the detail. But obviously for CAD right now, because of the risk sentiment, it really goes around with the oil market. And you can tell the commodity is still having a very large retracement. Look at the gold, look at copper, and look at iron ore, and look at WTI. Right, we are below $60 per barrel again, and all this is a fuel up by last week's equity market sell-off. Now, gold is a little bit interesting because I thought gold would have a rally last week, consider the panic into the equity market. But you can argue that gold did not rally last week, and bond yield, if you take a look at the bond, this is a bond yield, also did not make any significant new high last week. What does that mean? That means that the bond price did not fluctuate that much, and the gold price also didn't fluctuate. And bond and gold are usually another safe haven currency or safe haven commodity. Okay. So unlike, last financial crisis, when this kind of event happened, people just flee away and put their money in gold, put their money in bond. We did not have that last week. So that's why a lot of people argue this is not a recession. This is not something to worry about. This is just a technical correction for the equity buyer, because US stocks had been enjoying a very, very strong bullish trend for the past 2 and 3 years. Okay, so that's pretty much the calendar for the weekly. And last week, obviously, I took few trades. Most notably, again, it's Aussie Swiss and Aussie Yen, New Zealand Swiss and New Zealand Yen. Both trade got out, and I re-entered again prior to the Friday close, because I was hoping we have another round of selling. Obviously, that did not happen, and I'm still in this trade just because I'm still have this bias that this week we might not necessarily having to regain our confidence that fast. But this everything will change according to Wednesday when we have the CPI reading. Now, CPI reading could be a Tuesday. This was last week. So this US CPI reading could be a non-event, right? If you have a reading that's 0.3%, 0.2%, that's just, we think the deviation. So it's nothing to surprise for the market. Then the market will most likely be clueless. But again, if you have something that's very positive, that will be once again negative for the global market overall. And that's why I think if that's the case, since the expectation is higher for the for the headline inflation, if that's the case, then I think we have another round of buying into a safe haven currency. So I'm still kind of interested to putting a New Zealand Swiss sale, same as Aussie Swiss, and you could do Aussie Yen and New Zealand Yen as well. Okay, let me take a look at Aussie Yen. See what happened here. So Aussie Yen, very similar pictures as Aussie Swiss, and it's really just a matter of choice, right? I picked Swiss franc just because last week we have a rumor that Bank of Japan is going to reappointed Kuroda, the Bank of Japan chair is probably going to have another term. And if that's the case, what does that mean is that the monetary easing policy is going to continue, so that the market perceived as a quite negative, quite dovish news for the Japanese yen. And that's why I think it had basically diminish the Japanese yen strength. That's why I pick Aussie Swiss. But you could short Aussie yen if you want, based on the same idea that if you think this week the financial market is still going to be quite rattled, quite vulnerable, and we might have another round buying into the safe haven currency. Now, another trade I have is US dollar, and I did the same thing. I tried to short New Zealand dollar, or you can short Aussie dollar. So exactly same idea. Now, different things is that dollar not only is a safe haven currency, it will be the direct beneficiary if the inflation data continue to go higher, at least for the short-term beams. Okay, and British pound, I'm still interested for now, but I really want to see what happened to the inflation reading tomorrow. Because, I don't want to bet on it. We might have a very positive reading, then obviously that's going to reverse the British pound position again. Remember, British pound is always like a roller coaster, especially right after pre-exit. So if we have a very positive reading, then obviously you can buy British pound tomorrow. If you have a very negative reading, then the current bearish sentiment for British pound will continue. Okay, so but I want to wait for that inflation data just because it's important enough for to decide the direction for British pound. Okay, so that's pretty much the trade I have. I don't really have any updates aside from this. So I will again be back. Let me take a look at equity market. Yeah, we still have pretty positive equity market for the day. Okay, so I'll be back, and I have a traveling notice. I'm going away from today, so I will still do the video, but obviously I don't have that much equipment when I'm on the road. So, try my best. I'm probably gonna do once a day if I could, and at least once a week for sure, but once a day if I could. Now, if you want the fattest update, a quick update, you can just go to my podcast, because I record that directly from my iPhone. Okay, so that's why it's gonna be very fast. I record from my iPhone, upload, and that's it. I don't need to render in for the YouTube, things like that. So if you wanna, I'll say for the daily updates, the fattest one will always be, you can go to my website, go to the audio section, or you can just go to Google Music or Anchor. Anchor is the apps I'm using for the podcast, for the daily podcast. You can just go to Anchor, you can subscribe to me, then you get the fattest update for the daily sessions. Okay, so that's it for now. I will be back very soon, and safe trading again. Be careful just because the market, what happened last week, so it's still kind of vulnerable at the moment, and just trade carefully. All right, guys, I'll see you soon. Bye bye.